We take a look at some of the big movers here on Wall Street. Diane King Hall is with me, and we are taking a look. Good morning, Diane, at Berkshire Hathaway. Tell us a little bit about that story.
Good morning, Nicole. All right, so listen, what we learned from Berkshire Hathaway's latest results is the company is now sitting on a record cash pile. It now tops $381 billion. Earnings did jump 33%. That was thanks in part to its hefty insurance underwriting. You'll know it well, Geico obviously under its umbrella. Operating profit jumping to $13.5 billion. That's up from $10.1 billion a year ago. Again, you had low catastrophe losses and strengthened underwriting, particularly with Geico. Now, this quarter, again, Berkshire was a net seller of equities. They sold $12.5 billion, bought $6.4 billion over the period. Its five biggest holdings: Amex, American Express, Apple. And I always, when I think about Apple, I remember a time when Warren Buffett was not into the tech sector and was, worried about that sector. But he's had a long-time investment there. Bank of America, one of his top holdings. Coca-Cola, we know Warren Buffett's been known for having a Coke every day. And Chevron, that's a part of their five key holdings. Now, keep in mind, this is the final report where we'll hear earnings under Warren Buffett, right? When we get the next report, he will no longer be at the helm of the company. We know that he had announced that earlier this year that Greg Abel, his hand-picked successor, will be taking over. Now, shares have been, they haven't performed as well, not bad, but underperformed the S&P 500 this year, especially as investors try to make heads or tails out of what's next for this company, especially when you look, for instance, at the record cash pile and not being a net buyer of securities. Nicole.
Amazing. I mean, we've seen them piling up that cash for a time now.
Yes.
Also saying it's hard to find things to invest in. I mean,
yes.
We've heard some of that too. But record stockpile of cash, and he leaves, I guess, on a pretty good note there.
Yeah.
Let's talk about ON Semi, which I see some of the numbers crossing. Some of your thoughts?
So they did better than expected on the bottom line. They earned on an adjusted basis 63 cents per share. So again, that was better than expected. Revenue topping 1.55 billion. That's better than some estimates, but in line with some other expectations. Shares, though, of ON Semi, though, they've been bumping around. They were indicating higher in the pre-market. A little bit lower right now as investors kind of try to make heads or tails. It has been under pressure year to date, and one of the issues is their biggest business is automotive chips, and that's been a challenging area for the sector. Demand from car makers has been soft for several years, and in fact, last quarter for ON, their auto revenue segment hit a 3-year low. Management says that conditions are starting to improve, so that's a positive sign for the company. They're navigating this tough auto cycle. They're trying to position themselves for the AI hardware boom. So, they could see improvement if demand spills over into areas like power management, sensors. So that could be a tailwind. So it looks like right now, investors trying to make sense of it just popped above the flat line as we're speaking, Nicole.
And look, tech today, you have right now, tech is the second best performer. Consumer discretionary, the best performing group today. Tech, and then also communication services, number 3. Finally, let's talk about Cisco with an upgrade. I see it up at 1% today.
Yes, yeah. Cisco is getting some love from UBS today. They're getting more bullish on it. They've upgraded it to a buy. They were neutral on this one, so they've come off the sidelines and have conviction around it. They've raised their price target to 88. It was 74, so that suggests about 20% upside. The reason: growing demand for technology, especially as it relates to powering AI. The AI story, the data center story is a big part of it. They see this as big business for Cisco. They're estimating that they pulled in more than $2 billion in AI-related orders this year, mainly from the big cloud companies like Meta, that are, of course, just on this race to build out the infrastructure around it. And they talked about both demand on the commercial side and the government side, and they believe that that is a tailwind for Cisco. They think revenue growth will top expectations, especially into 2026. They also see an upgrade cycle coming, and they expect Cisco to benefit from that. That customers will replace their older Cisco networking gear, so that will bode well. for Cisco, and security they also see as a bright spot as well. We have this conversation around security and how much more security is needed nowadays as we see the growth and proliferation of AI, and they think that Cisco's next-gen cybersecurity line, that they think that will be a tailwind as well, Nicole.
Yeah, so they have an $88 target here, and it's at 73 today, up 1%. Diane King Hall, great to see you. Thank you so much for key names there.